Have you ever just stopped and thought about how quickly the financial world is changing? I mean, it feels like 1 minute we're talking traditional banks, the next it's all about these cutting-edge digital assets completely reshaping how we even think about money.
Absolutely. It's moving at lightning speed.
So today we're doing a deep dive into something pretty significant. It's a major pivot by one of Germany's biggest banking groups.
A really big one.
Yeah, and it could affect millions, literally millions of users. And it really signals a huge shift in mainstream finance. The key insight here, I think, even the most, let's say, conservative financial giants are now seeing digital assets not just as some fringe idea, but, well, maybe as a core part of future finance. Our mission today is really to pull out the most important bits from the source material, help you understand not just what's going on, but why it matters and what it could actually mean for digital assets and for you.
And we should stress, when we say biggest banking groups, this particular one, Sparkassen, has such deep historical roots. I mean, it's traditionally been the absolute picture of cautious conservative banking.
Right.
So for them to head in this new direction, it's not just interesting, it's a really powerful sign of how fast things are challenging those old ideas about stability versus innovation.
Okay, so let's unpack this then. The big news coming from a Bloomberg report just this Monday, July 7th, 2025, is that the Sparkassen, that's Germany's savings bank's finance group, is getting ready to launch cryptocurrency trading services for its customers.
Yeah.
Now, given that conservative history you mentioned, how much of this do you think is genuine belief in crypto versus, well, just responding to market pressure or maybe new regulations?
That's a really good question, and it highlights what a market shift this is. I mean, think about it.
Yeah.
Just 3 years back, committees within Sparkassen were actively warning against offering crypto services.
Really, actively warning against it.
Oh, yeah. Their concerns were pretty much what you expect back then. High volatility, other big risks. It reminds me a bit of how businesses looked at the internet early on. First, skepticism, fear of the Wild West, then suddenly, boom, realizing it's essential. This feels like that kind of moment for crypto within traditional finance. It suggests they've realized, look, despite the risks, the demand, or maybe the opportunity is just too big now to sit out.
Interesting parallel.
And Matthias Diesel, he's the Bavarian Savings Banks Association president, he actually hinted at this back in April. Even then, he was still calling the assets highly speculative.
Right, hedging a bit.
Exactly. It shows a clear internal rethink of that whole risk-reward calculation.
That context really does put it into perspective. And I mean, this isn't just any bank group. We're talking over 50 million users.
50 million, it's huge.
And they control something like 2.5 trillion, which, what is that, like $2.9 trillion in customer assets? That's like the GDP of France or the UK. The scale is just, it's staggering.
It really is.
And they've apparently stated, quote, "The Savings Banks Finance Group will provide reliable access to a regulated crypto offering." So it sounds like a real commitment, not just testing the waters.
Sounds like it.
And to do this, they're using DekaBank, right? That's their asset management arm. What's the groundwork DekaBank has been laying for this?
Right, DekaBank. Well, they've been quite busy, actually. They got a cryptocurrency custody license. That's a big one from BFIN, Germany's financial regulator, and the ECB back in December.
Okay, December 24, presumably.
Yeah, seems like it. And even before that, they got a cryptocurrency securities registrar license in July 2024. These licenses are absolutely crucial.
Why is that?
Because they signal regulatory green lights. They provide the legal framework needed to operate. It basically paved the way for them to launch institutional crypto trading services back in February of this year.
Got it. So institutional first, now retail.
Exactly. And a spokesperson for DekaBank said the retail service, the one for regular customers, is aiming to be up and running by summer 2026.
Summer 2026. So still a ways off, but planned.
Yeah, it shows it's not a rush job. It's a carefully planned, phased rollout built on getting those regulatory ducks in a row first.
Okay, and what makes this even more interesting, I think, is that Sparkassen isn't doing this in a vacuum. This seems to be part of a much wider trend, wouldn't you say? Across Germany and, well, maybe all of Europe.
Oh, definitely.
Because we're seeing other major German players step up, like Landesbank, Baden-Württemberg, Germany's biggest federal bank, right? They launched a crypto custody service with Bitpanda way back in 2014 for institutions.
Oh, way back, yeah. Early movers there.
And then more recently, DekaBank, Germany's second largest bank, partnered with Borussia Stuttgart Digital just last September for a crypto trading and custody pilot.
Another big name.
And Deutsche Bank, They're planning their own crypto custody service for 2026, also partnering with Bitpanda. Seems Bitpanda's doing well out of this.
They certainly seem to be a key partner in the region. And if you zoom out and look at Europe as a whole, the trend is just undeniable. You've got major banks like BBVA in Spain, Santander, Société Générale in France, Standard Chartered in the UK,
All getting involved.
all announcing or already launching crypto services. Patrick Hansen, he's a senior director at Circle, focusing on EU strategy, he actually said back in March, and I'm quoting here, Europe is home to the largest number of crypto-friendly banks in the world by far.
Wow. By far.
Yeah. He added, it'll probably take years for other regions to catch up, which raises that key question. What's really pushing all these established banks?
Right. What's the driver?
Well, it seems like a mix, a powerful combination, really, of growing customer demand, people are asking for this stuff, and crucially, better regulatory conditions, specifically the implementation of MiCA.
MiCA is markets and crypto assets. We hear that a lot.
Exactly. That framework seems to have been a real catalyst.
MiCA does sound like it's bringing some much-needed legitimacy. But from your view, are there still big regulatory gray areas banks like Sparkassen have to worry about? Or does MiCA really give them all the clarity they need to jump in like this?
That's a critical point. Look, MiCA has provided a level of clarity that was, well, frankly, unprecedented before. It sets out guidelines for stablecoins, for crypto business disclosures. It tackles a lot.
Okay.
And that's what gives these traditionally cautious banks the permission, maybe the comfort, to finally step in. It addresses many of those previous gray areas.
So it reduces the perceived risk for them.
Precisely. But, the digital asset world moves incredibly fast. So regulators and the banks themselves will have to keep adapting. But right now, MiCA is definitely the key piece that unlocked this wave of adoption we're seeing.
Okay. So let's bring it back. What does all this actually mean for, for you, the individual listener, maybe? This Sparkassen news has clearly generated a lot of buzz in crypto circles. I saw Philip Bolotov, the CEO of ERA Labs, called it a big move for mainstream adoption.
Mm-hmm. It certainly feels that way.
So for you, the average person, it means crypto is becoming, more accessible, doesn't it? More integrated into the financial system you already use, maybe more. Legitimate, it takes it out of that niche speculative corner and puts it potentially right there, offered by your local bank.
That's the potential upside, absolutely.
But couldn't you argue, though, that by bringing crypto to potentially 50 million users, many of whom might not be sophisticated investors, they're also exposing them to all that volatility we talked about, even with regulation?
That's definitely a fair concern. And it's something these banks are, I'm sure, thinking very carefully about. But the key takeaway from these established players getting involved is how they can bring more stability, better security, and crucially, trust to the market.
How so?
Well, while the underlying assets might still be volatile, when a group like Sparkassen steps in, it signals a certain maturity. They come with established compliance departments, robust security protocols, risk management frameworks, things that can help, let's say, de-risk the experience for ordinary people.
Okay, providing guardrails, maybe?
Kind of, yeah. And looking ahead, the source material suggests the next step could even involve Sparkassen talking to the Metallicus blockchain banking team about something called the Digital Banking Network, or TDBN.
Metallicus?
Yeah.
TDBN. What's that about?
Well, Metallicus apparently wants to build, and this is their description, the world's most customer-centric digital asset banking network using blockchain technology.
So more integration.
It points towards that, yeah. A future where these initial trading services are maybe just the start. You could see more deeply integrated blockchain-based financial products offered right through your traditional bank account.
Wow. That shift from deep skepticism just a few years ago to active adoption and now potentially even deeper integration, it really highlights the speed of change here. It underscores how much can shift in a short time, setting the stage for whatever comes next.
It really does.
So let's just quickly recap the key nuggets from this deep dive. We've seen the absolutely massive scale of Sparkassen's move into crypto.
50 million users, trillions in assets. Hard to overstate.
We've seen the solid regulatory foundation that Europe, particularly with MiCA, seems to be building.
It is enabling these moves.
And we've seen this clear, undeniable trend of traditional finance starting to really embrace digital assets.
Absolutely. And that leads to a final, maybe provocative thought for you, the listener, to mull over.
Go on.
Consider how this convergence, this meeting of old school traditional banking and new school blockchain tech might fundamentally reshape how we all think about and how we interact with our money in say, the next 5-10 years. What kind of completely new financial products or services might pop up when you combine that established trust with these innovative digital capabilities?
That's a fascinating question. What does happen when trust meets tech like this on such a large scale? It's definitely something to keep an eye on, isn't it? We really encourage you to keep exploring these implications.